Yes, good evening, everyone. Today we are going to, this is cost accounting module. Today let's look at lecture one, which we are going to look at the introduction to cost accounting. So let's start briefly with our introduction. When we talk about cost accounting, what does it mean? Cost accounting is a branch of accounting that focuses on the measurement, analysis, and reporting of costs associated with the production of goods and services. It provides a valuable information to managers for decision making, cost control, and performance improvement. So, cost accounting, it's basically not for external reporting, but for internal insights to improve our efficiency and profitability. And then cost accounting focuses on capturing, analyzing, and reporting a company's cost. So what does cost accounting help? Cost accounting, it helps businesses to understand how much it costs to produce their goods or services, which is initial for making informed decisions about pricing, profitability, and resources allocation. So, cost accounting, it helps businesses to understand the following. It helps the businesses to understand the cost of individual products or services. It also helps the businesses to understand the efficiency of production processes. It also helps the business to understand the profitability of different operations, and it also helps the business to understand where costs can be reduced. And then let's look at the benefits of costing accounting. Number one, improved decision making. Cost accounting provides detailed information about costs, which can help managers make informed decisions about the pricing, production, marketing, and in other areas. So it can also help in cost control. By understanding where costs are incurred, businesses can identify and implement cost-saving measures. Increase the profitability. By improving efficiency and reducing costs, a cost accounting can help business improve their profitability. And then performance measurement. Cost accounting provides merits for measuring the performance of different departments, processes, and products. So let's look at why is cost accounting important? Why is it so important? We have improved decision making. For example, let's imagine having a crystal ball for your business. Cost accounting equips you with accurate and detailed cost information. In other words, it guides you towards smarter pricing strategies. Smarter pricing strategies, efficient production decisions, and strategic marketing plans. So, cost control. Squeezing out every penny, think of cost accounting as your financial watchdog. So in this one, it means it pins out areas where expenses are high, allowing you to implement effective cost-saving measures and tighten your financial belt. And another reason Why is cost accounting important? A profitability boost. The golden key to success, every business owner dreams of seeing their profit. All the business, every business, they dream of seeing their profits to increase, to grow, their profits to get profits in their business. So cost accounting unlock the doors to profitability by optimizing resource allocation, minimizing waste, and maximizing the return on every investment. So we have another one, post-performance measurement. So taking the pulse of your business, just like a doctor monitoring your vitals, cost accounting tracks the performance of different departments, process, and products. So this vital information allows you to identify areas for improvement and celebrate success. So let's look at the elements of cost accounting. What are the elements of cost accounting? We have direct materials, we have direct labor, and then we have overheads. So those are the elements of cost. So what are direct materials? The direct materials are materials that are directly used in the production of a product or a service. In other words, these are materials that can be easily traced and directly identified within a specific unit of product. So they become an identifiable part of the finished good. These are direct materials. So the examples for the direct materials, we have wood used in furniture manufacturing, we have fabric used in clothing production, we have flour or ingredient used in baking, we have raw materials used in chemical products, and then we have component used in assembling electronics. So those are some of the examples of direct materials. So what are direct labor? The direct labor, these are labor costs that are directly associated with the production of a product or a service. So in other words, the direct labor, this is labor cost of employees directly involved in converting raw materials into finished goods. Their work can be directly linked to a specific unit of production. So the examples, we have wages of assembly line workers, we have salaries of carpenter crafting the furniture, we have wages of bakers in a bakery, and then we have the pay of chefs in a restaurant, and then we have labor of construction workers in a building house. So when we look at all these examples, these are employees that are directly involved in the production of a product or of a service. So let's look at overhead. These are indirect costs of production, such as rent, utilities, depreciation, and insurance. So in other words, these overheads, these are indirect costs that cannot be easily traced to a specific unit of production. They are necessary for the overall production process, but benefit all products. So these indirect costs, these are the costs. So let's look at the example of overheads. We have indirect materials. So under indirect materials, we have factory supplies like lubricants, glue, nails, and cleaning materials. These are all examples of indirect materials. And then we have an example of overheads. We have indirect labor. So under indirect labor, we have wages of supervisors, we have quality inspectors, factory, maintenance staff, and then we have a security guide. These are all examples of indirect labor. And then we have under overheads, we have utilities. So under utilities, the examples of the utilities, we have the electricity, we have the water, we have gas used in the production process. Those are all examples under utilities. And then the examples under depreciation, we have the costs of wear and tear on the factory equipment and machinery. So we have rent. Under rent, for example, we have lease payment for the factory. Those are all examples of overheads. And then we have factory insurance. Under factory insurance, we have insurance costs for the factory and its contents. So those are all elements of cost. So let's look at cost classification. So we are going to classify the cost by function, by behavior, and by controllability. So by function, it means a manufacturing cost. We have under it, we have a manufacturing cost, selling and administrative costs, and financing costs. So by behavior, we have variable costs, fixed costs, and then semi-variable costs. So under controllability, we have controllable costs and uncontrollable costs. Usually in our costs, we have this cost that can be controlled and then this cost that cannot be controlled. It occurred naturally. So let's look at this graph. We have a total cost, total variable cost, and then we have the fixed cost. So let's look at variable costs. What are variable costs? Variable costs are costs that change with the level of activities. For example, we have direct materials, and then we have direct labor. So in other words, variable costs are costs that tend to vary in total with the level of activities. As activities level increases, then total variable costs will also increase. So as the total cost increases, then as the level of activity increases, also the total cost will increase. So in our graph 1. So what does this graph mean? It means as total costs increase with activity level, the cost per unit of variable cost remain constant. So as the total cost increases with activity level, so the cost per unit remain constant. This is graph 2. So let's look at fixed costs. Fixed costs, these are costs that remain constant regardless of the level of activities. For example, we have the rent and then we have the depreciation. For it will remain constant regardless of the level of activities that you have in your company. So in other words, the fixed cost is a cost which incurred for an accounting period and which within a certain activity level levels remain constant. So the costs, we have the total cost and then we have the level of activities. So it remains constant. It remains constant regardless of the level of activities. And then what does graph 2 says? The total cost remain constant over a given level of activity, but the cost per unit falls as the level of activity increases. So that is graph 2. So let's look at a semi-variable cost. These are costs that have both fixed and variable components. For example, utilities. So in other words, semi-variable costs, these are costs that have both fixed and variable cost elements and are therefore partly affected by fluctuation in the level of activities. So these semi-variable costs, it involves both the fixed variable, the fixed and then the variable components. So let's look at the example of semi-fixed cost. For example, we have the electricity bill and then we have the telephone bill. So when we look at this, the graph, the cost remains fixed up to some level of the activity, or even if there is no activity but then increases within the increase in the level of activity. So that's explain our graph. So let's look at the cost accounting techniques. We have the job costing, we have process costing, and then we have the activity-based costing, and we have the standard costing. So job costing, it means it tracks the cost of individual jobs or projects. So the process costing, it tracks the cost of a continuous production process. It is a continuous costing. So we have activity-based costing. It allocates costs to activities rather than products or department. So we have a standard costing. It compares actual cost to predetermined standard cost to identify variances. So let's look at the objectives of cost accounting. When we have cost sustainment, so it means knowing the price of success. So an accurate cost sustainment, just like measuring ingredients for a perfect recipe. Cost accounting. So this the cost statement, basically it determines the cost of production of goods or services. So that's all about cost statement. And then we have effective cost control. So cost control, it monitors and minimize costs. It monitors and then it monetizes the cost. So we have enhanced profitability. This enable the business to reinvest in the business or expand operations and achieve sustainable growth. So we have informed decision making. So under informed decision making, it provides information for making informed decision about pricing, product mix, and then other business activities. So and then we have improved the performance measurement. So as a performance evaluation tool, providing insights into the efficiency of different departments, processes, and products. So this can allow you to identify areas for improvements, and then you set performance benchmarks, and then you can track progress towards operational excellence. So that's improved the performance measurement. In other words, you measure your performing. So that's all our presentation for today.
All right.